Yes, that's right, Ernest. Ernest is asking, this is based on end of day prices, and that's correct. It uses actually not just end of day, but it uses um, high, low, and end of day. High and low are used for MFE and MAE, which I will go through in case you didn't know. I know some of you have joined this before and you would know. Um, but yeah, that's a good question. There's no intraday prices used for this analytics. That doesn't mean that we're not going to do it in the future. I was just asked by another really big site who's interested in TradeWave if I'm planning to do intraday seasonality, and that is something it's been on the list of possible enhancement in the future, but not at this point. Only end of day patterns. So we're at the TradeWave screen right now. I'm going to go over the very basics of it. The left side and the right side are two different things. I covered the left side. The left side is what our analytics engine, which runs for on a very large servers, detects. But the right side is where we can take a look at any seasonal pattern whatsoever. It doesn't matter what it is. You just have to make sure you have selected the um, correct group. So right now I have S&P 500 or any US stocks will work. Any of US stock ones will have access to all stocks. Actually, right now, TradeWave only does Wilshire 5000s, which is about 3,500 stocks. But there's an enhancement that should come out next week, which will allow any single stock in that's traded in the United States, which is about that includes ETF. It's about 51,000 symbols will become available, but not at this point. Just Wilshire 5000. But I can select any of these and then just go and type any stock name. Let's go with a big one, Apple, and press enter. So what are we looking at? We're looking at Apple starting today, which is 23rd of July, and holding it for 30 days. What would happen if you did this last 10 years? So if you bought Apple on July 23rd, and 30 days from now is August 21st, you would have lost 15% in 2015. You would have made 12% in 2016, and so on for each of the years. Last year, you would have made 0.73%. So this is what Wave Viewer does. It just gives you the percentage of gain and loss for any date range. And in order to enter a date range, you have to enter the starting date and the number of days that you want to hold it, and it calculates what the end date is. See, that is the start date, and then in this case, 30 days later, it's the end date is August 21st. What is this one below? This is what I call the trend chart. What trend chart is, it takes every single one of these years, an entire year, 365 days of stock data, and it averages them together. It does something mathematical called detrending, which is not important for you to know, but it averages. The number of the value is completely unimportant. What's important is the trend. When you see this up move like this, that means the average trend was up based on last 10 years. you can see that it actually goes up all the way here. And by the way, I am just changing this date interactively. It's the same as here. You know, when I update this, the bottom updates. And when I update this chart here, the top updates. So it's the same thing for fine tuning just 1 day or 2 days. It's easier to use the top. Here it is now from today for the next 40 days. You can see what Apple did. And when you look at this trend chart on the bottom, you can see based on last 10 years, how did Apple perform different parts of the year? We just see there's that drop here in Apple. Let's take a look at what it looks like in the up there. See that? Because it was a downtrend, we just knew that it was going to have a lot of red, and it does. Last year, there was a loss of 0.97%. Basically, last 5 years, there was a loss. And what are the dates? The dates is 30th of August until 2nd of October. And a lot of people know that Septembers are not good months for Apple. It's just not done well. And we can take a look at that. All you have to do is take the pull down and just select the month, September. There it is. September last 10 years was just terrible for Apple. But it did okay in 2024. And that is from beginning to the end of the month. This is just a shortcut for dates. You could manually enter it here too. It doesn't make a difference. But how about based on last 20 years? All you have to do is go down here and select the number of years. Now, trend chart calculates based on last 10 years. And you can see 50% of the years, it was positive and 50% was negative. And then it goes on an uptrend and so on. So that's the purpose of this trend chart. But the bottom also has 3 possible charts. This middle one, which is the stats, wave stats, right here. It gives you the detail, statistics. The average loss for all these years was minus 8.72%. The average gain of winning years was 8.12%. But if you average winning and losing years together, it was 0. It's probably slightly more than 0, but it actually probably was 0. And you can see the cumulative return right here. You see it's the black line, which is Apple, is pretty flat. And it's compared to buy and hold of S&P 500. When I click the right one, this is the price chart. This is what the Apple stock looks like right now. This is the level right there. It's 214.40. Closed yesterday. It's just a line chart of it. And you can click any of these bars and see the historical trade for that year. So this is the historical trade for 2020. See, it actually was at the peak and it just dropped sharply and then closed a little higher and so on. Any of them. For any of these, you can also click this down arrow and you can see the exact prices for that particular year. So this is the very, very basics of the wave viewer. There's a lot more it does, but this is just the basics. Now I'm going to bring this thing on the left back. What you see on the left is our analytics engine actually did it went and crunched the trillion data points to come up with this information, and it found the absolute best seasonal patterns, and then it ranked it with Sharpe ratio. I know some of you might know what Sharpe ratio is, and some won't. I'm going to have a video about Sharpe ratio. It will be probably good for you to look at it online. It's a very basic finance term, and it defines risk. What does that mean, defining risk? Typically, by the way, I look for Sharpe ratio above 1 if I'm looking at the last 10 years. Let me click on the very first one with the highest Sharpe ratio. There it is. This is a 280-day pattern, so it's a long pattern. I'm going to also look at the trend chart. But look at it. All of them are pretty large winning bars for all the years. That pretty much is the reason that it comes up and has a high Sharpe ratio. What does one of these things look like if it's low Sharpe ratio? Let's go and take the bottom one. One of the bottom ones. How about 0.03? Look at that. Why is this so low? Is because not only it has some negative years, but look at how inconsistent from one year to another is, even on winning years. That creates a low Sharpe ratio, which means getting into this trade is risky. You don't know. You could have a huge drop, you could have a moderate gain, or you could have completely flat. That means it's a higher risk trade than something with a high Sharpe ratio. Let's go to this one. This one, Microsoft 256 days. See, it was really strong, and then last year it lost. Now it's time to talk about these two things, MFE and MAE. I actually ended up picking very complex terms. I picked up in automated trading world. However, it's just so relevant that I end up calling it that. It's MFE stands for maximum favorable excursion, and MAE stands for maximum adverse excursion. What does that mean? I'm going to click it. You end up with this light green section on the top of these bars. I'm going to click one for 2019. Let's see what that is. So you see, we went on the trade in Microsoft here on 23rd, which is today, held it for 256 days and ended up having a it's this one. Ended up having 19.78% gain, which is very respectable. But what if you knew the peak and you sold it at the peak right there, 179.798? That light green part is the extent of the move. This is the maximum you could have made during this pattern if you know where the top was. Now, that's not really useful in many cases. However, it's very useful on short-term trading, and it's very useful to decide why you need a stop loss, especially after you have gains. I'm going to click on MAE. Now you see this pink part? This is the lowest it went against this trade. For example, if I click here on the same one, 2019. We're here. Do you see this? When we got in here, it dropped to there, 125, and then it started going back, and it eventually broke even and then started gaining. That minimum that it went to is the pink part, or another term for it is drawdown. This is how much it went against you. And it's used to many times to find out if we are in a outlier year or we're not. But that doesn't mean, like, look at this, 2024 dropped 18%. However, it only went up 2.93%. This was not a good year for Microsoft in this date range. Year 2020 was weird, we all know, because of COVID just started. So that's the basics of MAE, and I'm going to go over how are the ways that we can use it. But now, I mentioned that I am going to talk about presidential election cycle, which is the most unique thing this platform does. I am going to select one of these indices. I'm picking indices common. And then I'm going to go up here and type SPX. Then I'm going to go and select buy and hold, which switches the date range to January 1st to January 1st, which means you just don't get out. And every bar is about that particular year. The gain and loss for the year from beginning to the end, January 1st to January 1st. We have 97 years of data here. And look at that. You can see that 68% of the years was bullish. And the other 32% of the years were bearish with losses. So 2 out of 3 years, S&P 500 ended up positive from beginning to the end of the year. That's all that means. But how about we can filter it further? And I like to do it by presidential election cycle. So there are 4 years to a presidential election cycle. And with TradeWave, you can see if the behavior of a security or a index changes based on the presidential election year. And that usually makes more sense and it becomes more relevant when there's a lot of data, like 97 years. So this year is a PE plus 1 year. I'm going to select that. Okay. First thing we look at the trend chart right below here, especially the first quarter. If you remember, the first quarter was crazy. Everybody was talking about tariffs and how there's going to be a economic Armageddon. Things were pretty bad. But look at this. It was pretty bad other years too. From 2013 to 2021, first quarter did okay. It did well. But in 2009, minus almost 13%, minus 2.43%, minus 10.71%. And this year was minus 4.01%. And look at it. It goes up, comes down, goes up, comes down. That's volatility. That's seasonal volatility. You can't count on this part of a PE plus 1 year to be bullish. Let's go all the way there to the bottom. I didn't go far enough. I'm going to use this for precision. There. Look at that. It's terrible. A lot of losses, and 2025 dropped to, actually, it just turned. Look at this. I forgot to tell you about this one. This square is either red or green. It turns green when TradeWave thinks that, actually not thinks, determines that more years are green than red. And it turns red when it finds that more years are red than green. So this is a better bearish date range. So this date range, historically, since 1929, has been a lot of flat years, a lot of negative years, and some green years, but they're a lot less than the red years. But look at what happens at the end of this. It goes up, and it goes up, and it goes up all the way to here. I actually have a video about this one. Hmm. You might have seen on my YouTube channel. I don't want to waste your time bringing it up, but there's a YouTube on my YouTube channel. There's a video that I released on April 6th, which was a Sunday, and I said market's going to go up all the way to August 2nd, and the reason for that was this chart. Let me show you. I go to August 2nd, right there. That jumped. And I'm just going to do precision here. There. Do you see this? I am going from, it's got to be 118. From 7th of April until August 2nd, which there is this uptrend, pretty strong. I said, based on what happened in the past, 84% of the years, look at this, right down here. 84% of the years, the market closed up. And by the way, that 84% that you see here is the same here. Percent profitable, 84 years. Just this way, you don't have to keep going back and forth. You can see it right here. 84% of the years was positive for this date range, and 100% of the years was positive since 1985. Even the years that were negative, the worst one was 1969, that dropped 6.91%. The other ones were even less. That's why I was very bullish when everybody was bearish. I actually had people laugh at me because everything was so negative on CNBC and financial news. And it worked. Look at what happened. So far, it's up 24.64% since I released that video on April 6th. And this is the reason, this is how I analyzed it. And this is how I determined. What happens next? Well, after August 2nd, we can go here. Change it to second. And make this there. So look at this. We're now looking at from August 2nd on the 21st of September. It was negative last time, a little positive in 2017. It was up 6.19% in 2009. This is not very bullish. from what I see. Even these years are pretty flat bullish. So I would say I am not going to be long in the market between 2nd of August until 21st of September. It would be better not to be. How about if we waited till here, which is 27th of October? Then it becomes bullish from 2009 to 2021. How about after that? This is the best time. This is not working perfectly. There. Look at this. From 27th of October until end of the year, it's been positive since 1977, 100% of the years. Even the year that had the least was an extra 1% up, but pretty flat. What was the drawdown? Biggest drawdown was 3% in 2009. Chances are really good that starting 27th of October till end of the year, the market is going to go up. Why? Because it's done it every year since 1977. Is it guaranteed? Absolutely not. Market does whatever market wants to do. However, if prices drop during this period, you can see that you just got an outlier that has not happened since 1973. That would change the characteristics of the market, and that actually would be visible to you here. So if you guys have questions about this, please let me know. Audio, or there's Ernest. Just exclude years like beginnings of 1933. Yeah, I know what you mean. That's just a layer of complexity to add to remove those. Which I do have on my list of features to add, but there were just so many other things that could have been added. So that will be done hopefully by end of the year or next year. When I have a team of developers, I'm going to add a lot of these additional features. But so far, it's the basic essential to use to be able to see these patterns. So now, let me just show you the following year, P plus 2, which is a midterm election year. This one's the most fascinating to me of all of them. By the way, when you click here, either you start from January 1st till end of the year, or you start 2 weeks before this window. It's just cosmetic. There's no other change. So this is PE plus 2 years. I'm actually in the wrong. I want this. There. This is buy and hold for P plus 2 years. And as you can see, the last year shown is 2022, which the year after would be 2026. Now look at this. This is beginning of the year, and as you can see, it's very volatile. And then there's a sharp down. Next year will be very volatile if the market repeats what it's been doing for the last 100 years. And look at this. When you get to this point, right around 27th of August, things seem to turn up. Now, I'm going to be showing you why I called my book The 100-Year Pattern. We go to 27th of 27th of September. It's the starting date. The year is PE plus 2, and I'm changing these days to 295 days. I just want you guys to see if you can appreciate this as much as I do when I look at this. I actually didn't even appreciate this when I first found it. It took a little while before I realized what I'm looking at. What you're seeing here is that from September 27th of a midterm election year until July 18th of the next year is the single most bullish time for S&P 500 in the last 100 years. Last time it failed was 1930. It dropped 23%. It has never gone down. It was flat in 1978, which is the year of the oil crisis, and it's never gone down. Look at the cumulative return. The cumulative return of this period is 5,045% since 1930. The cumulative return of S&P 500 for a PE plus 2 year, if you would have bought at the beginning of midterm election year and you sold it at the end, is 49%. You are talking about 100x on your cumulative return just for this date range. This date range has never been discovered before. I discovered this by TradeWave. I have done some research and have not found anyone having discovered this ever. And this is when I show experts, this is what kind of blows their mind. Now, I did a regression analysis and did some math to see, okay, if this is so bullish and it's 295 days every 4 years, which is around 20% of the time, what percentage of S&P 500's overall gain is because of this? And after I did this math, I was done. I have the math. I can publish it at some point. It's around 68% of the cumulative return of S&P 500 for the last 100 years is due to this 295-day period. It's stunning to me that this has repeated so much. And you don't have to worry about this till next year, about 13 months from now. Okay. So what is a simple trading strategy that I use? Now, TradeWave is not a trading strategy. TradeWave is a set of raw material, a whole bunch of historical studies that goes back, in this case, 100 years, that you can use in order to either create your trading strategy or you can enhance your existing trading strategy, which is how some of the professionals that use TradeWave are using it. They're not giving up their strategies. They're using this to filter and enhance their strategies. And in the case of somebody, I actually have a hedge fund with him, a trading firm. He has shown that he has increased his bottom line by around 20%. So now, what is my trading strategy? My trading strategy is really, really simple. I have it as a two-prong. I look at the broader markets to see if the broad markets are bullish or bearish or neutral. Those are what I look for. And when I, for example, in the case of where we are right now, let's see. Oh, I should have done that. Where we are right now here, we're still somewhat bullish, but we're going to go through a bearish period right here. Although I still do some trades, but I don't do very big trades during this time. But anyways, let's say we determine we're bullish, and we did determine that we are in very bullish time starting October 27th. However, we're also in a bullish time here, and we're in a bullish time until the first week of August. Then we go to the left. Let's say we want to trade stocks. I like to find my stocks on S&P 500 because I do a lot of options trading, and most of S&P 500 stocks are optionable. So I just brought up S&P 500. It automatically defaults to 10 years, 9 out of 10 years. And then it lists patterns, which are 189 opportunities. I can also look at patterns based on the last 20 years if I wanted to. It only brought one up for a 20 of 20 years. See this? Chubb Limited, 178 days, and it's been bullish. It's been profitable 20 years in a row for this date range, from now until 16th of January. You can also switch this to, let's say, 19 of 20 years. What that does, 19 of 20 years means that you're okay with 1 year to be a failure. So it's only 95% of the years was profitable. And here is Arch Capital Group, which 2018, it ended up closing 2.35% lower after it had gone up 7.85%. If I was in this trade, I would not have lost, because as soon as I get to a certain level, I usually set my stop loss at break even. And so on. But I'm going to go back to 10 years to show you another thing that you can do. So now we want to filter this list on the left. Let's say I am interested in short-term trading, which is what I do most of the time. And I like patterns that are between 10 and 40 days. I can say 10-40. I got one. I'm going to drop this to 9 of 10 years to see how many more. Look at this. Now I have 33. If I switch this to 8 of 10 years, I end up with 86 opportunities that are between 10 and 40 days. But you know what? A bunch of them have really low Sharpe ratios, and I'm not interested in those. So let's filter that too. I'm going to do add SR greater than 1. Now I have 7 opportunities only. Here's Ross Store. Sharpe ratio of 1.33. But look at this. We have several short opportunities listed. This time of the year, short opportunities start showing up, especially when we get closer to September. Oh, look at this one. There is a major drop here on Henry Schein. Maybe even better if you wait a little bit till right there. End of July. And then you have to see what makes most sense. Look at that. If you wait 36 days, it was profitable 10 out of 10 years until September 4th. Every year as a short. POOL, pool. They sell pool supplies. And you can see that there's a pretty decent opportunity based on the last 10 years. Here's another one. Ulta Beauty. American Express also has an opportunity, 11-day long. And T-Mobile. Another opportunity. Right there, 22 days. I'm going to switch to Wilshire 5000, which is bigger. A bigger list. This is 21 opportunities. And why don't I do AVGP greater than 4 or 5? See, now we're down to 11 opportunities or 6. When I do 7, we only have 4 opportunities. So that's how I filtered this list on the left. Now, if you forget any of these things, there's also this tooltips. If you turn it on, you go on these things. It describes it for you. There's no delay, no nothing. So what I'm going to start doing is creating videos about some of the opportunities that come up. So let's look at Wilshire. Can I filter long? Yes. If I just say LONG, this is only longs. See? Another thing you can do, you can just click on DIR and it sorts it. Yeah, it's not something you put on the you can just put long in here, not in a chain. But you can sort by all of these. See, all the shorts are on the bottom. Now, can I save a filter? That's actually a great idea, but no, that mechanism is not here. But I like the idea. I'm gonna write a note and add it to the things. Save filter on opportunity table. That's a great idea. Neil, I can tell you I've come up with a lot of ideas and other people, but nobody came up with that one. So I really like it. That would simplify things. I keep entering really long filters, so it would be great to save it. But thanks for the idea. I will have it on the list of things to do and hopefully have it soon. Let me just mention one other thing I haven't told you is what's this TW and TWR? It's listed in the book, but these are measures that are only unique to TradeWave. TWR stands for TradeWave ratio, and TWA is TradeWave average. As I mentioned to you about Sharpe ratio is calculated based on this dark green part. But TWR is calculated exactly the same as Sharpe ratio, except it uses the dark green plus light green part. Why is that good? That's good for short-term bursts because there are some of the opportunities come up with a low Sharpe ratio, but a high TWR. What that means, year after year, this stock has gone up sharply, then dropped. Gone up sharply, then dropped. Well, I want to know that because on short-term trading, I want to jump in and out. One of my go-to strategies is at the money credit spreads. And I use the light green part and TWR for my selections because if the stock jumps up, I'm out with like 25 to 50% profit on my risk capital. So that's the point of TWR, and TWA is just the average based on dark green and light green part. There's some details of it in the book about that. Here's just a couple of other things. This down arrow thing, if you click it, you end up get a JPEG picture of this. Download it. Here it is. See, you can share this or put in an email or do whatever you want with the JPEG. This one is called the Portfolio Manager. If you click that, you can see and create. I have a lot of portfolios. I am going to create a new portfolio called Webinar July 23. Add portfolio. Then I'm going to go and select it. This is an empty portfolio. Let's say I like this, one of these, and I want to remember it. All you have to do is click plus. It immediately gets saved to the portfolio that was selected before. Now, no matter where you are, if you want to get back to it, you click the recall, and it goes back. Another thing it does, it creates a report about that particular pattern with all those charts. And this is a static report right here. You can literally copy this and paste it into an email or a social network or something, and people will have access to it. And if you send this to someone else and they come in here, do you see where it says load on Wave Viewer? I can click this, or anybody can click this. You don't even need an account. And it opens up TradeWave and it places that one, it loads it in right there. Of course, people without an account don't have access to do much, but they can look at it. You can also click on the calendar and you can set yourself a reminder for this pattern. Uh, you can set a Google Calendar that will notify you on the start date and the end date of this pattern. So if you actually set up a pattern for next week, you get notifications for start and end dates, both. And then over here, you can simulate trading this. Right now in here where it says 0%, you can actually see this pattern's gain and loss over time. And over here, if you add number of shares or amount of money invested, it tracks gain and loss based on the number of shares or the initial investment for you. So that's the basics here. And you can also write a note about any of these patterns, which it saves it for you. And that's that. You can do the same thing here, but there's also a feature of you can download the information about a pattern as a CSV right there. If I click it, it's a CSV that you can open with Google Sheets or Excel. That's pretty much it. This is what I was going to cover.